today we'll talk about the topic of forward testing as well as back testing. So last time we had taken a look at the strategy, and the strategy was to look at the daily candlesticks, and based on the daily candlesticks we were going to figure out what the market direction would be, and based on the market direction we would enter the trade based in that direction that we are expecting the price to go to. Now, there are two aspects of testing. One is back testing. So we're going to use our Forex tester software program for that. It has history for many, many years, going back many years. So we'll use that historical data to figure out what's going on. So we'll take a look at price action, and that's the only thing we are looking at. At this point we will not be looking at any sort of news. We will be discounting all the fundamentals. So any rumors, comments, news, anything like that that came out will not be or will not go into our testing here at all. We don't know what happened in the markets, so so it's not a perfect system. So we cannot take those into account. So our stats won't be perfect, but still, it will give us a solid base for how often we can get the direction of the market correct. And then we're going to look at our forward testing second. So this will start next week, but today I just wanted to lay the groundwork to talk about how we'll be forward testing. So forward testing essentially is testing the strategy under live market conditions. So for that, every day what I will do is I've created a spreadsheet here. So I've created a market analysis spreadsheet here. So I have all these different pairs that I look at every single day, and then I define market direction based on the price action for the day. And then we also take a look at potential entries and stop loss and take profit targets, where I'm expecting price to go to, whether it's a long entry or short entry. We also account for news, and then at the end of the day we'll put in any comments about any, let's say, speeches or comments or news that may have impacted our trading here, that may have changed the direction of the trade. So this is our forward testing. And actually, before we continue on, so this will be what we'll be using going forward. So I was supposed to start doing this or sharing this with you this week, but last time we could not, you could not see my screen. And that's why we kind of got delayed with this one. So I won't do this tomorrow, because tomorrow is the last day we'll be doing live sessions again. Then we'll start again next week. So we'll do this going forward, starting next week, starting Monday of next week. And then for now, we will just test the strategy just as is on the Forex tester. So we'll just do back testing for now. But I just wanted to give you the framework that I'll be using going forward. So starting Monday, I will fill out these, and so we'll do one for the week, and then we'll break it down on a daily basis, and we'll go with that. So this is the framework that we'll be using. But before we go on, I do need to do the disclaimer. So just a quick disclaimer, all of this is for educational purposes only. I am not an investment advisor, and I do not have any idea of your individual investment needs, so I will not be able to provide any investment advice. So all of this is just for educational purposes, and just remember that trading is a risky business, so it's very important to be careful when you are trading. All right, so let's jump on to our Forex tester here, and we will get started. Okay, excuse my kaleidoscope here. Just wanted to make sure I'm sharing the screen here. All right, so let's go on to the Forex tester. So in the Forex tester here, I do have, I'm looking at pound US dollar here, and I have downloaded the data for pound, the history data here from 2010 all the way to 2018. There are some spots missing here. That's okay. So let's go on, and we'll call this. So today we'll just have fun. We'll just take a look at pound dollar, and we're not exactly taking a ton of trades here. We'll just be guessing the direction. So we'll just play a game, and we'll be guessing the direction of where the market's going to go. So let's take a look here. So yeah, so we'll start from 2010. That's where the data is from. So this will take just a couple of minutes here to generate our ticks. So while this is doing that, we'll just give it a minute here. Let's, oops. So I can't move anything while that's going on. All right, so we'll go back to that so we are able to see it. And I'll share the spreadsheet that I'm using for daily analysis. So if you guys wanted to follow along and see, you know, if your analysis matches up with as we do our forward testing, you can do that. I'll post it in the Facebook group later on. So we'll have that as well as a resource, so you guys can test along with me as we are doing this. So just while this is downloading, another point that I wanted to share is that for our testing, just as important the back testing is, forward testing is very important as well. And it's a good idea to do your testing not under live market conditions, because when we are trading under live market conditions and we have a trade on, our perspective is skewed. So we, of course, want our trade to win. As a result of that, we're not in the perfect frame of mind to make sure that we are able to look at it from an impartial perspective, but because we are so focused on getting a certain type of result from our own trading, our perspective, completely the skewed perspective, will have negative impact on our testing. So we want to make sure that testing is done with an impartial perspective, and it's done outside of our trading hours. That's why I do the live sessions at this time of the day, because I'm not trading at this time. It doesn't matter how we are looking at the market. We can look at it with the impartial perspective, and most of the trades have already played out one way or another. So there is really there are no emotions that are involved while we are doing this. So when we are looking at the results of our forward test, we'll do that starting next week. So when we look at our results, it will have played out one way or another. So the targets may not have reached completely, but the trade itself, the market direction, would have played out one way or another. So that's something to keep in mind. We always want to do our test while we are not under the pressure, and we don't have our perspective skewed because of the trades that we may have on. So with the Forex tester here, this is a software that I'm using, and I'll post a link to it in the in our Facebook group as well. If you want to test this out, I think they give a trial version of this as well. If you use the link that I'll provide is an affiliate link. So if you do use that link, I think you get a discount on the software. This is a software that I have used previously for the testing, so I do like it. The way this one works right now, what I've done is I went to the data center. The Forex Tester 2, which was the older version of this, had two different places where you had to download the history, and then you had to go into your testing phase and then start your test. For this one, there's just one mode. So you go to the data center and you download the data. For this one, I have downloaded a lot of data because we are going one full day at a time. So each bar will be a daily bar, so it will capture a full day's worth of activity. So as a result of that, I have gone back quite a bit, and that's what we will be looking at. So looks like my terminal here may have been disconnected. Okay, let me go back here. So it looks like it's almost done. We are at about 80%. I was trying to download the data prior to our meeting here, but because I'm going backwards a lot, it takes a while to download this data. And now after we download this data from the data center, then we have to generate these ticks. And the way we generate the ticks is by clicking on new project here, and we give it a name, and then we just click on generate ticks for the pair that we will be working with. So in this case, we'll be working with pound US dollar, and we'll be starting at about 2010, March of 2010. So we have data all the way from 2010 to 2018. So we have 8 years worth of data that we'll be working with, which is a nice amount of data. But it will go through that, or we'll go through that fairly quickly, because each candlestick is a day. So there isn't a ton of so we're not sitting there for a large amount of time. Okay, we are almost done. Any questions while we're doing this? So the daily candlestick is the strategy that we'll be testing right now. Once we are done with testing of this strategy, we'll move on to another one, which will be the Renko bars. So Forex also has Renko bars in its software. So we'll take a look at that. Renko bars are nice because they don't take time into account. They're more range bars. And once we get into that strategy, we'll take a look at that. So one of the good things about Renko bars is that it helps us stay in the trend a little bit longer. So we'll see how that works as well. So Gregory, yes, we're using Forex Tester for back testing. So we'll be doing a combination of back testing and forward testing. I have this spreadsheet that we'll be using for our forward testing. So every day I'm going to fill out this spreadsheet. So this is when I do, as part of the trade room, when I do the daily market analysis call, I generally go through all these different pairs. And we take a look at what market direction will be. So the next day I will be sharing this spreadsheet, and we will basically look at actual versus projected. So what were we thinking that the price will do, or what was our projection, and what the reality was. So what happened? Where did the price actually go? So this will be a forward testing method that we'll be using. So this way we take a look at our live market conditions. We know exactly, because it's live, everything kind of goes into it. So if there's a piece of news that comes out, or something that changes the direction of the market, we'll be able to take that into account as well. So everything will be taken into account, whereas when we do back testing, none of the fundamentals or the news or the comments, rumors, none of those play a role in the back testing, because we don't have any of that information available. So if price moved, let's say, very, very rapidly one day, all of a sudden they changed direction, we wouldn't know why that happened. But with the forward testing, because it takes into account, we will be taking into account all that information, we'll be able to have more precise testing, essentially. But what we'll do is we'll take a look at all these pairs, or I'll be taking a look at all these pairs. I will post this template in the Facebook group, so if you wanted to follow along, you can do that as well. So based on the spreadsheet, basically what we're looking at is the pair. For each pair, we project the market direction, where I expect the market or the price to go, and then potential entries, whether if the market direction, let's say right now for euro dollar is short, then we'll be looking at where the potential entry would be for that short trade. where the stop loss and take profit targets would be. Any news that are coming out, we'll put them in here, and then any comments if something happened during the date, let's say somebody was speaking, ECB comments came out or something like that happened, we'll put those in here as well. So basically the goal will be to do projected versus actual. What were we projecting the day before? So the next day I will post, when I do the live, I will post this the next day so that I'll show you where I was projecting it, and then we'll take a look at where it actually went. So we'll do the forward test this way, and this will be an ongoing thing because as we are doing it live, it will take time for us to gather the data. Then we'll have some stats on how many days we were actually right, and what happened, why were we not right, the days that we were not right, and then we'll just have all of that information with us. But in terms of the software, this is the Forex Tester that we'll be using. So it's called Forex Tester 3. So what I did was I just went and downloaded the data here. So I'm going to go to, so I'm going to pause that. I'm going to go to, instead of 1 minute chart, I'm going to do a daily chart here. So we'll go 1 day at a time. Okay, so I'm going to pause it and let's make it bigger. So as we can see here, each of these is a 1 day's worth of data, and we are starting in March of 2010. So we are still March, April. Okay, so let me quickly change the chart properties here. I don't like that black color, so I'm going to change this. The candle up here will be green and candle down will be red. Oh, so candle filler, I need the filler to be green for the up candle, and so this one's just a little bit easier on the eyes. Okay, so this is what we have. This is where we are starting. So right now, because we are at the right at the beginning here, we don't have too much support and resistance. So let's see what we do have in place. We'll start with that, and then we will, as we continue on, we will we'll see as the support and resistance develops. So we have 1 month's worth of data here, the daily candlesticks. So we'll start here, and I will go 1 bar at a time. So today it's just a guessing game, and we're not keeping any stats because I'm not entering any trades just yet. It's just a matter of actually just seeing if you're right or wrong. So it's just think of it as a simple game. So that's how we're going to do. We're going to project the direction of the market, and then and see if you're right or wrong. Okay, so with this one, what we have here is an up move. We had a pullback, price moved up and then pulled back off of here, and then it has moved up. So right here we have indecision candle. So when I do the daily market analysis, not only do I look at what color the candle closed, but I also take a look at what the candle looks like. So this candle here is an indecision candle. We have pins on both sides, and we have a small body here. So basically it means there's a bit of indecision in the market at the moment. So going forward here, it could go both ways. So this is what this candle looks like. This candle here, see how it pulled back and then went up. So with this one as well, we could see the price go in either direction. So when we see a candle like this on a daily chart, I would generally not trade this chart. I will look for something else, somewhere another chart where the candle is like that. So we don't have to trade every single pair every single day. The idea is to pick 2 or 3 best charts or best candlestick patterns that we see on a daily and trade those. So this one would not be best one, so I would pass on this. So I'm going to go to the next candle and then decide whether I would engage in a trade. So now we have a candle close right into the support level here. So we have a bearish candle close. So based on the bearish candle close, my projection for the market direction would be to the downside, but we are into support. So this could turn around if it doesn't clear the bottom here. So if I were to take an entry for this one, I would look for price to break below the low, do a back test of it. So I would go to a smaller time frame. I would look for price to push into this resistance line here, our support, turn into resistance. Once it holds below this, I would take a trade short. But based on the daily candle close here, my bias for the market direction will be to the downside. But under live real market conditions, I would just wait to take an entry. So right now, we're not actually taking any entries. We're just playing a guessing game. So because we're just playing a guessing game, we are just, so I'm going to say market direction is to the downside. So let's see if that works. It is. So price drops right into our next support and resistance level, and then the price pushes up from there. So our market direction was correct. So now we have a bullish candle close here, but we have our resistance right there. So market direction is bullish. So I would be looking for price to move up from here. As we can see, price moves up, tries to go higher here. But as we talked about our resistance right there, price closes below that. So it is bullish, but now we have a big pin on top. So with this one as well, the pin on top creates a little bit of neutral bias in this one. So the bias would be bullish to neutral. Again, this one, after this day, I would not trade this candle. I would go to a different chart where we can find some sort of solid candle close, so we have a better, higher probability trade to work with. So for this one, I would be passing on this trade. So I would wait for what the next day shows us. So let's see what the next day shows. So now we have a bullish candle close. It's above the previous support resistance level here. So the bias turns bullish. This is a good trade to get engaged in. So I would be looking for price to move higher based on this candle close, and price does go higher. So when we are trading under live market conditions, so it's not how that candle closes for that day. What we are looking for it, where we were, did the price go up from there? Because our market direction was up. So price went up, it went to the next support and resistance, or close to the next support and resistance area, right into this one. And then drop from here. So now we have a bearish candle close. We have a solid candle close here. We have a pin. So that candle looks good. So the bias is to the downside. So next day, I would be looking for price to drop. And price dropped a bit right into our next support and resistance area, but could not break through this one here. So when we are trading under live conditions, we would have to pay attention to the support and resistance areas. And once we see that price is forming either some sort of a double top or is getting stuck at that level, this is when we would remove the trade. So here what we have is price is just starting to go sideways now. We do have a bullish candle close. So I'm looking for price to go higher. So my guess will be up, and a price moves up. So that's a good solid candle close, but we are into resistance. So this is where price had turned. See how this candle had closed right into that resistance level, and then it moved higher before price dropped here. So with this one here as well, I would be looking for price to move higher, but this may not be a candle that I would be very careful trading this one, because really all we're looking for is price to go to that level, and it would have to break through this resistance level. And as you can see, this is the problem that happens when we are into this resistance area. And that's why I was saying this may not necessarily be the candle that I'd be trading, because there is a big wall of resistance there. Okay, so now we have next day, we have a big drop. And after this, once we have such a big drop like this one, we can get pullbacks in price. So with this one, the bias is now to the downside, but we could get a pullback like this one, because that's a huge drop. So we went from 154.75 to 152.58. So a couple hundred pips there. So let's, I would look for a pullback, and then my bias is to the downside from here on. So we had a small pullback, not a big one here. Small pullback, the market the bias still is to the downside here. So now we are into support. The candle is getting smaller, so we could be losing some momentum. So I would look for price to come back into this level once again. So my bias is still to the downside. So let's see. So here we go. Price came into this level here. See how it bounced off of this level. And then we have a big bullish candle close now. So bias has changed to bullish. So this is what we're doing. Basically, from day to day, we are guessing where price is going to go. So now, based on the bullish candle close, I'll be looking for price to move higher. But again, because this is such a big candle, I would be looking for a pullback and then looking for entry here. So as we can see, price pulled back and went all the way and then closed to the downside. So because we're not painting the candles, we're going one day at a time. We don't know which direction it went in. And that's the difference between when we are forward testing, we'll be able to see what direction the price is going in first, and we can make decisions based on that. And we can do that in the Forex tester here as well, but then we have to, it takes a while to paint the candle, so we won't worry about that. Okay, so based on this candle close here, I'm looking for price to drop. As we can see, price dropped, so we were right. We're looking for price to drop again. And as we can see, price dropped. And now we finally have a solid candle close into this support area here. But because we are into support, I would look for a bit of a pullback and then looking for a drop again. There we go. So we had a bit of a pullback there and a drop. So market direction is correct. And now we see that before the candlesticks were expanding. So that means there was momentum was increasing, but now the candlesticks are getting smaller. So we have a smaller candlestick, which means our momentum is now starting to wane. So we have to keep that in mind, but the market direction is still to the downside. Here we go. Actually, it dropped quite a bit. So this is a nice thing. Always when I'm trading, I'm always thinking about where the price will pull back to, because we can get better entry. So anyways, our market direction is correct, and we are all the way back down here. We have a big pin in the bottom, which means price could pull back a bit. So let's see. Pulled back a tiny bit. So it looks like something was going on in the market, because generally price doesn't drop that much. We went from 51.37 to 47.34, and then from 49.46 to 45.20. So quite a bit of a drop here. So now we have a big pin to the downside, which means price could pull back from here. So let's see. There we go. Price pulled back, but then closed down here. So when we're looking, so these are the things that are tradable opportunities. So after the pin bar, we were looking for price to pull up or push up higher. We were looking for price to move higher. It did that and then closed here like this. So there's still bullishness in this candle, but the big pin here means rejection. So this one here, I'm looking for price to drop further. It drops, but then closes up high. So next day, our market direction is I'm looking for a further move to the upside. And so when we look for drops and things like that, it's always nice to look at where the price has been previously. So these support and resistance areas are very, very important, because the price will tend to go to those areas. So now we have a bullish candle close, looking for price to move higher. Let's see, it goes higher, but then drops from our next support and resistance area. So now we have a bearish candle close, so looking for price to drop. So what we see here is prices in a sideways move. So we are in a range-bound market. If we were to remove this middle support and resistance line, we see the price is just going sideways. So it's not really doing a whole lot. So it goes to the high, it drops. Now where it is, we have a bearish candle close. I'm looking for price to go back down again. So let's see. Price goes down, finally breaks through that range that it was kind of shuttling back and forth in. So now we have a very, very solid bearish candle close. Based on that, we'll be looking for price to go down again. So I will look for a bit of a pullback here, potentially into this previous resistance, and then a drop. And it doesn't pull back as much, but the momentum still stays to the downside. So bias still is bearish. But now we are running into the bottom here. So we're getting closer to our support. And as we can see, our momentum is waning here because we have a small candle close. So I'm still looking for a drop, but not as big a drop. So let's take a look. It does drop. It does drop quite a bit, actually, more than I would have thought. But it does drop and then pulls back here. So we have a big pin. So once we have a large pin in a direction, it generally shows that price could go in the other direction. So I would look for price to move higher from there. It doesn't do that, actually. So our direction this day would not be correct. It goes right into the top of the candle and then drops from there. So bias is still bearish now. So looking for price to drop. And we get a pullback. So I'm still looking for price to drop. So the bias stays bearish till this candlestick is taken out in the other direction. So this one is not quite engulfing yet. So we still have bearish bias. And as we can see, price dropped right into the bottom here. So now we have 4 days where price tries to break this bottom and it's not able to do so. So I'm looking for price to move up higher now. There we go. Price moves up higher. So we have a bullish candle close looking for price to move up higher, but we are into resistance. So we'll have to be careful with this one. And as I said, we are into resistance. So price goes right into our previous resistance and then drops from there. So now we are going into a sideways move like this again. So we're just doing sideways consolidation. So if you take a look here, so we have a drop, sideways consolidation, drop, sideways consolidation. And from here, I'm looking for price to go into the bottom of this previous support resistance level. So into these levels here. So bias is to the downside. Let's see. It goes into the bottom, pulls back again. So now we have a doji. Basically, we are range bound. So I'm looking for price to go up higher. Doesn't do much. It's still consolidating sideways. So now either we need to see a candle close outside to the upside here for our price to reverse here, or we need to see a candle close below this range so that price, we're looking for price to move lower then. So let's see what happens, which direction. Right now, this candle is very, very neutral, and I would not trade that candle. So I would just wait. I would go to a different chart and find a better candle to take a trade on. So let's take a look. So now we have a bullish candle close. We are outside of that range that price was trading in for the last several days. So now we are bullish. My bias would shift to bullish, and price is not able to go higher. So this is a day that we are wrong in. So here, this is not a completely engulfing candle still. So again, I would wait to see where the price goes. But the way the candle has closed, we're still keeping in this overall bearish bias. So this could drop again, and it doesn't do much, just pulls back. So this is not a candle I would trade. We wait to see the real direction here. Okay, so now we have a higher high. Price wasn't able to break below this this support here. Good solid candle close. This is a bullish engulfing candle. So looking for price to move up higher again. But we are into resistance. So that's something to be mindful of. Whoa, that was quite a move to the upside. So big bullish move here. And then price closes as a doji. So something's definitely going on in the market because this is back from 2010. So, well, we know what was going on in the markets back then. There was a lot of havoc in the markets. Okay, so we had a big bullish move here. Price rejected that. So now I would not trade this candle because price opened and closed at the same time, and there's too much volatility in this one. So this is the time I would skip this and look for a different chart to take a trade from, see if we can find a better one. So I'll just wait for the next day. So we have a drop. So now price is closed below this previous support resistance here. Now the bias shifts to the downside, and we get a drop. That's a good solid candle close. I'm looking for price to move down further. So bias is to the downside, and we get a drop, but then price pulls back from this previous support and resistance area here. So as we can see, the daily market analysis is just basically we're looking at each daily candle, and based on that, based on the support and resistance, based on the way the candle closes, we're making a decision on where the price will go next. So with this one, we do have a pullback, but overall bias is still to the downside. Price is held below this. So I'm still looking for price to drop. And as we can see, price comes into this resistance area, then drops. And now we have a pin here. So price is just going sideways. So this one, the bias is to the downside, but this may not be the best candle to trade because we are in a very, very tight range now for the 2 days here, but the bias is still to the downside. So, so it does go down right into the bottom. And now we have a candle close into outside of this little tiny range that we were in. So the bias will shift to up, to the upside now. So bias is bullish. And here we go. Price closes up. So this is a good solid candle close. Price closes right into the top of the day. So bias is still bullish, but now we are into resistance. So we do need to see a price go on the other side of this resistance and hold here. So I would look for price to move up and then do a back test of this level and hold above. And this will be a place to take an entry long. And let's see, this is why, because if the price is not able to hold above, it can do this fake out and drop. So this is why when it comes to entries, when we start doing the entries, and we'll do that next week. So this one, we're just kind of playing around, just guessing market direction. That's it. The name of the game, it's a guessing game. We're just guessing the market direction. Okay, so now we have a bearish engulfing candle close. So looking for price to drop. So the bias is to the downside, and it doesn't do that. So we are pushing higher now. It's kind of slow, but it's pushing higher. So this is a bullish candle close. So second time around, we are closing bullish into this resistance. So chances are it may go through here. So just like this one, so we closed bullish and then price pulled back and then pushed into the same resistance level once again. So let's see if we can break through this one. So the direction would be to the upside, so bullish still. Here we go, price closes bullish. So now we are past that resistance, so looking for price to move higher again. And price is getting stuck at the next support and resistance level right into here. So here we have our support resistance level. And now we have a bearish candle close. So now we're looking for price to drop. Let's see. It doesn't do that. It drops a bit, but then turns around completely. So overall, we are starting to form this little trend line to the upside here. So bullish trend line here. And but its price is just struggling with the support resistance level here. It does go higher, but then closes below. So my guess will be that price would come and test this trend line again. And it does that, closes below. It does go above because there's still bullishness here. Now we have a bearish candle close. We still haven't broken, really closed above this support resistance area in a number of days. So now the bias shifts more to the downside. Okay, so let's see if price will drop. So the bias here is bearish and it drops, but then it's still getting stuck here. So really we're just going sideways in this right now. So all these days price is just going sideways. Nothing much happening. So it may not be the best one to trade under live market conditions because we need to wait to really see a market direction. So this is when you move on to a different chart. That's why we do multiple chart analysis, because we're looking for that good candlestick formation that will give us actually, our market direction will be correct and we will be able to get some pips from the trade. So with this one, it's just going sideways. So let's see. Okay, finally, we have a bullish candle close. So that's a good Maribozu looking candle and looking for price to move up higher there. So the bias is bullish. It goes up a little bit, pulls back. So the bias is still bullish because now we have still an upward bias. So it could pull back all the way into this support area. So I would wait to see if we're going to pull back further, and this is where you go to a smaller time frame and you wait for the trade to show itself. So basically what I'm looking for is price to come into the support area and then bounce off of that. And it does just that. It comes into the support area and then bounces off of that. So overall, our bias was bullish, but we were looking for a pullback into this previous support and resistance area. So that's a nice bullish candle close. I would look for price to move higher, and it does. Now the candle is becoming smaller. We are getting into the next support and resistance area right over here. So we have to be careful with this one, because price could change direction. So let's see where the bias is still up, but may not be the best one to trade again because we are right into resistance. So let's see if it can cross it. It doesn't. So this is why we have to be careful with it, because we were into resistance there. So now we have a bearish candle close. So we're looking for price to drop, and it does. So this is our daily chart analysis. So basically every day you look at how the candle closes for that particular chart, for that particular pair. And based on that, you're guessing which direction the market's going to go in. Okay, so with this one, price drops, looking for price to drop further, kind of come back into this 148.50-ish area. It almost makes it there. So, and then it pushes up from there. So now we have a bullish engulfing candle close. It closes above the previous resistance area. And so the bias now is to the upside. So there we go. It moves up slightly, and that's a very small candle close. So, but it still stays bullish. The momentum is waning though, so we would have to be careful. So again, you want to go to a different chart and trade that day. So let's see, price drops. So this is why, because the momentum was, it was losing momentum. So now we have a bearish candle close. So looking for price to drop, and it drops a little bit. So now we're starting to see the price go sideways. So we have bullishness and a pin on the top. So we have bullish to neutral bias here, and it's staying sideways. So this one, again, bullish to neutral. We have pins on both sides, but we still have bullishness there. Now it's completely going sideways. So this is definitely not the pair to trade, because now we have this narrow range the price is going in. So again, here, just like we had talked about in the bottom here, we need to see price break into either side. Either we need to see a close above, outside of this range, towards upside here for it to continue further, or we need to see a close below the range for it to continue downward. So right now it's just bouncing around. So this is probably not the best day to trade this chart. So we'll wait for the candle close. So now we have a bearish candle close. So looking for price to drop, and it drops further. So now we are into the next support and resistance area, right into here. So we have multiple pins there. So still looking, the bias is still to the downside here, but it doesn't break the low. So it does drop, doesn't break the low. We are back into the bullishness, but we are back into our resistance as well. So bias is bullish, closes above the resistance. So still bullish. There we go. And now we are into the next support and resistance area all the way up. So I would expect it to run into trouble there. So let's take a look. It runs into trouble there. All right, so I think we will wrap it up here. So this was just a just kind of quick and dirty guessing game, and we'll play some more of this tomorrow as well. So I won't start doing the forward testing tomorrow. We'll start it on Monday, so that way we have a whole week's worth of data that we can look at, and we'll continue these sessions. This is a good practice. So just playing this guessing game gives you a lot of practice. So if you're like, for example, think of yourself as a basketball player. All you're doing is you're just shooting, you're just, doing some throws, shooting the ball, and you don't really, you're not practicing anything in particular. You're just trying to doing your free throws, just trying to get the ball in the basket. That's the only purpose here. And then when we actually refine the strategy, once we get good at picking up market direction, then the second step would be to refine our entries and exits. So for now, we will just play our guessing games. We'll do that tomorrow as well. And next week onwards, we'll start doing our forward testing as well, but we'll continue with the game. So we'll do a few of these pairs. So it's very, very important. Doesn't matter whether we are athletes or we are traders, we need to sharpen our skills. So just like athletes spend most of their time sharpening their skills, they're just shooting the basket, they're just doing their throws, they're not playing in tournaments, whereas we as traders spend more time executing and less time practicing, completely the opposite. Whereas for everything else, most people will spend more time practicing, not implementing. So this is our practice. So we'll continue on with this one. There's no real rush to get anywhere in a hurry. The more we practice this, the better we'll get at picking where the market direction is, because if you can get the market direction correct, half of your that's half the challenge, right? Just getting the market direction correct, and then you're halfway through there. So keep that in mind. So we'll call it a wrap here. You guys have a wonderful day, and we'll practice this more. So Gregory, no worries. This is a good game. It's a good practice in just guessing, and that's all we're doing. So yeah, keep try that on your live charts. Look at the New York close for today, and just do some projections. Where do you think the market's going to go next? So we do that setups game. That's another game that we just basically look backwards to see what setups were present on the chart. So this is projections is basically the other aspect of the same game that I ask my trade room members to post charts on, to project where it's going to go. And the idea is not, how right we are, but the more we practice it, the better our eyes will get trained, so our eyes will adjust to seeing market direction better. So this is the same thing here. The more we do it, the better we'll get, and more pieces of data our mind will start picking on. And we'll always be there. There will be times when we are wrong, so that's okay. It's just a guessing game. But the more we do it, the better we'll get at it. All right, so you guys have a wonderful evening, and I will see you again tomorrow at the same time for our next session, and we'll continue on with the same pound-dollar chart here. We are into July already, so as you can see, this goes by quite quickly. And I will see you all tomorrow. Bye for now. Have a great evening.